This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on January 15th, 2016. Our time is 8:44 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3, and we have the shows streaming live on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. If you ever miss a radio show, they are there. And I heard about, through Harold, someone listening to our radio show in Panama. So we have people listening all around the world. We also have a podcast, too. It's through iTunes. Type in The World Financial Report on Radio. You'll find us there. We're portable. We go on any of your devices. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a 0.29 carat, round, brilliant cut, fancy, vivid, purplish pink. It's a beautiful diamond, can be seen at rarecoloreddiamonds.com, featured diamond of the week. And as we start today's program, it's a Friday morning. Stock markets around the world have been plunging. In the United States, Canada, the Far East, oil down heavy, Canadian dollar down heavy. It's interesting to note, Harold has been predicting for a long time that the Canadian dollar would go to 60 cents. And now Macquarie, and we'll talk about it a little bit more in the show, Macquarie coming out here saying 59 cents, right around where Harold was predicting. So obviously people are listening to the radio show, and so they should be, because Harold, we've been doing the show a long time. I started doing the show with you in February of 2002, and we have been through a lot together during that time with the financial collapse of 2008 and 9, and here we are headed into what seems to be very, very scary economic times. We're seeing oil plunge. We're seeing stock markets plunge. Canadian dollar pull back in a major way, and we need your knowledge now more than ever. And what are you seeing, and what do you have to say to us on what is a crazy day and a crazy week on the financial markets?
Well, Randy, the markets around the world are in turmoil. There's no doubt about it. The currency markets, the commodity markets, the stock markets. The Dow opened this morning down 400 points. You know, it's funny that on Thursday the market came back about almost 300 points, and everybody was euphoric and saying we're out of trouble and, you know, the correction is over and da-da-da-da-da. That is so far from being true, because the fact is that the market opened up today down 400 points, and the TSX, Toronto Stock Exchange, is down 263. The TSX is about to break 12,000, and the Dow Jones has actually broken 16,000. You've got the NASDAQ trading at 44.99, 4,500 basically. Just a short while ago, it was over 5,000. The U.S. dollar is down slightly today, but it's trading right at 99 cents. There's no doubt that the U.S. dollar is going to go to 108 to 110 as probably the strongest currency in the world. Not that things are great in the United States, but they're better than everywhere else. The crude oil market, down $1.55 this morning. We're trading at $29.55. So this is very interesting and very, very important. Oil's been dropping, obviously, because there's huge supplies of oil on the market. And then on top of the huge supplies of oil, Iran is now shipping oil, Russia is now shipping oil, Iraq is shipping oil. It's only adding to the tremendous, tremendous glut of oil. So that's why oil prices are falling, along with the fact that we know Saudi Arabia is punishing every oil-producing nation at this point, as they're the only country that could survive this onslaught of oil. Where do I see oil going? See oil going to $25, possibly $22 before this whole thing is over, which is why I've been saying that the Canadian dollar is going to go to 60 cents. There's a direct tie-in between the crude oil market and the Canadian dollar, and both of them are dropping and will continue to do so. Now, obviously, that could change if some situation happens fundamentally throughout the world. If Iran and Saudi Arabia are really going at it and they start blowing up each other's oil fields, then all bets are off. You can see oil prices go up $100, $200. I just don't see that happening at this particular point. Now, the fact is that when the news came out that Iran and Saudi Arabia were fighting against each other, and I've traded oil for almost 35 years now, so I've been very successful trading oil over the 3 decades. And in my experience, when this type of fighting goes on, especially with Saudi Arabia and Iran, 2 major oil producers, there's a premium to oil. You see oil go up $10 or $15 just based on the presence that we could see problems and we could see war and we could see oil prices skyrocket. But that didn't happen this time, and we saw that happening. That was the interesting thing. Any other time I would have suggested that we take a short-term long position in oil just based on the fact of what's happening in Saudi Arabia and Iran. This time I just didn't see that happening. We didn't see any premium to the war. We didn't see any premium to the fighting, and we basically just stuck to our guns and said that oil was going to drop, and lo and behold, oil is now trading at $29. Now, don't get me wrong. There's no way in the world that I'm happy that oil prices are dropping. And the reason I'm not happy about that, it hurts my friends in Alberta. Most of my best friends and clients and listeners to our radio show are in Alberta, and my heart goes out to everybody there. But I hope that you're taking our advice, because the fact is that this is going to continue. And we've been doing extremely well in the markets because we're the only company that is on the right side of the marketplace. So the fact is that oil is going to continue to drop unless there's a geopolitical situation that changes that. Just based on the sheer glut of oil on the market, we're going to see oil prices going lower, which consequently is going to drop the Canadian dollar down to around 60 cents, and at a time when the U.S. dollar is going to approach the 108 to 110 level. Most of my clients are sitting in U.S.-based dollar investments with me and are making upwards of 25% a year or more. So, again, if you're not doing that and you're concerned about what's happening with your investments, you need to get in touch with me because I can help you. On top of that, as the old expression goes, as goes Walmart, as goes the United States, because they're the biggest retailer in the world. And basically the news came out today that Walmart is about to close 260 stores. 260 stores. If that's not a direct representation of what's happening in the retail market in the United States, that's exactly what I'm talking about. So Walmart's going to close 260 stores. Oil prices are still dropping. Stocks around the world are just getting killed. And I'm very strongly recommending that you sit on the sidelines if you're sitting in stocks. We've been hoping that our clients would get out of the stock market a long time ago, and many of our clients have. They're either sitting on the sidelines or have just totally liquidated their positions. You know that your retirement savings plans are doing horrible. They haven't made money in the last 10 years, and that's with the market coming up substantially. So you could imagine how poorly your retirement savings plans are going to do based with the fact that we've got a huge declining stock market in Canada, and then on top of that, the oil market is dropping in Canada and is a Canadian dollar. And if the stock market is a directly responds to how the economy is doing in that country, you don't want to be in stocks at this particular point. You want to sit on the sidelines, or you want to get out in total. And in your retirement savings plans, and many of my clients have redirected, gotten out of it, paid the taxes on it, and come into other investments with us that are doing way better than the mainstream. We think outside the box. We're into alternative investments. We're not talking about stocks or bonds or paper assets or anything like that. We have alternative investment programs that our Canadian clients are investing in that are doing phenomenal at this point. So, again, if you're concerned about what's happening in the market and to your investments, you really need to get in touch with us immediately. And I will sit down and speak to you no matter what your financial situation is. Whether you're a multimillionaire or you're just barely getting by, it's imperative that we speak because I could definitely help you. So at this point here, what I see happening is that as the U.S. dollar continues to be the strong currency, gold is going to continue to fall. However, gold is up today about $10. It was up $17 or $18 at the opening, just based on what's happening with the stock markets around the world. But at this point, gold is starting to back off again, as the U.S. dollar is going to be the strongest currency of all. It's going to be stronger than the euro. It's going to be stronger than the Swiss franc. And the only currency that will be stronger is the British pound. But the British economy is not in very good shape. So all in all, you need to redirect what you're doing at this point here. And again, if you're confused and you just don't know what to do, pick up the phone. Most people are shocked when they call the office and they ask to speak to me, and I pick up the phone and speak with them for as long as you need to talk to me. So please, there's no egos here. You and I are all the same. I'm a Canadian. You're Canadians. We want to do the best that we can possibly do at a time that is very volatile, very speculative, and very, very risky. And I think we have a very good handle on what's happening in the marketplace. We're about the only company that makes recommendations on the most volatile markets in the world, and I am very proudly saying that we've been right the majority of the time. Nobody's going to be right 100% of the time, but the fact is that the trend that I'm giving you in the marketplace at this point here is real, and if you do the right thing, you can make an awful lot of money from it. If you just sit there like a deer in the headlights type of scenario, you're going to get beaten up just like you did in 2008, and there's no reason for that to happen. So the predictions are as follows. Gold still is going to fall unless there's a geopolitical situation that's going to change that. And one of it would be what's happening in the Middle East at this particular point. The other is ISIS. Obviously, we're keeping our eyes very close on both situations. Same scenario with silver. Silver's trading at $14 today, but the fact is that if there's no geopolitical situations that are going to affect the metals, gold's going to drop to $1,000, silver's going to drop to around $11.50. We're going to see oil, now that it's below the $30 level, I'm feeling $22 to $25 oil, again, unless there's a geopolitical situation that happens with Iran and Saudi Arabia. On top of that, we see the U.S. dollar going to 108, 110, which is only going to make our investments in U.S. dollars for our clients even that much stronger. So, number one, congratulations to all of our Canadian clients that are on board with us at this point. And for those that are sitting on the sidelines, give me a call next week, and I will get you right in these markets because, again, 90% of the money is made by 10% of the people, and it appears at this point that my clients are in that 10%. So, Randy, that's what I see going on at this point. One of the big problems at this time is the fact that Walmart is closing 260 stores. That may not seem like a big deal, but in the United States, that's a huge deal because they are the number one retailer in the world, and it proves that the economy is not as strong as everybody thinks.
Speak with Harold personally, privately. The call is free. Obviously, when you speak with Harold, it's confidential, 100% confidential. 1-800-432-1022. 1-800-432-1022. Or connect with Harold at rarecoloreddiamonds.com. Our featured diamond of the week is a .29 carat, round, brilliant cut, fancy, vivid, purplish pink. You can see it at rarecoloreddiamonds.com, featured diamond of the week. There's video of the diamond there. Well, as promised, Harold has been talking about this for quite some time. And I know that people have been thinking, well, that seems like it's really aggressive. But Harold has been bang on. Harold has talked about the Canadian dollar going down to 60 cents. We had this week, Macquarie Group, David Doyle, Bloomberg's top-ranked forecaster for the Canadian dollar last year, said Tuesday that he believes that the Canadian dollar could go to 59 cents by the end of 2016. And he was very accurate in his prediction, as was Harold last year, saying that the Canadian dollar would break 70 cents. Now, what we're wondering about here in Canada is when the Bank of Canada meets next week, will they reduce interest rates? Some people are saying they should, others are saying they shouldn't. If they do, you can pretty much guarantee that, yes, the Canadian dollar is going down much further. And if oil continues to go down, the Canadian dollar is going down much further. Interesting to note, obviously here today we had crude oil break 30. Crude at $10 is already a reality for us in Alberta, for the oil sands producers. Think oil in the 20s is bad? Well, here for us, we're selling it below 10. Canadian oil sands producers are feeling the pain as bitumen, the thick, sticky substance at the center of the debate over TransCanada's XL pipeline, hit a low of $8.35 on Tuesday, down from $80 less than 2 years ago. So you can see that, as Harold was saying, our thoughts go out to those that work in the oil patch. It is a very, very difficult time for those that are working in the oil patch in Alberta. And we've seen the oil price come down very, very dramatically along with the Canadian dollar. If you have any questions about what you should be doing in the environment that we're in right now, financially, even geopolitically, speak with Harold. RareColoredDiamonds.com, 1-800-432-1022. He's there to speak with you personally and privately and help guide you as to where he believes there is an opportunity to make money, profit, and protect the money that you have today. Kyle Bass, he is a hedge fund manager, and he is a person who advocates investing in hard assets like gold. And he brought up something that was very interesting this week, and it's very, very frightening. And Harold mentioned this when he was interviewed on Bloomberg by Deirdre Bolton a couple of years ago. Harold was on Bloomberg. Actually, sorry, I guess it was Fox Business, right, Harold? That's right. You were on, Deirdre was on Bloomberg and then switched to Fox. So Harold was on Bloomberg Business, and he was talking about diamonds. And he mentioned that China was not going to be doing well and weren't doing well, and he was challenged. But he has been correct. Now, Kyle Bass came out and gave us a very horrific, and this is very scary when you think about it, narrative. He says, what I think the narrative will swing to the end of this year, if not sooner, is the real issue in China is not simply that profits have peaked. The real issue is the size of their banking system. Do you remember the reason the European countries ended up falling like dominoes during the European crisis? Was their banking systems became many multiples of their GDP and therefore many, many multiples of their central government revenue. In China, in dollar terms, their banking system is almost $35 trillion against the GDP of 10. And their banking system has grown 400% in 8 years, with non-performing loans being non-existent. So what are we going to see next in a credit cycle? And in a credit cycle, you see some losses. But if the Chinese banking system has just 10% in losses, you're going to see them lose $3.5 trillion. That, according to Kyle Bass, who is a hedge fund manager, has done very well with his hedge fund, recommended that Texas, their pension fund, buy gold. They did very well with that recommendation. But Harold, it does get you thinking. You did mention this on Fox Business to Deirdre Bolton, that China's not doing well. You were right in saying that, and we're seeing it here today. The Chinese stock market is in a bear market. It's down 20%, even based on massive Chinese government manipulation. And if their banking system goes, as Kyle Bass thinks it will, we could have a serious financial crisis in the world very, very soon.
Oh, you better believe it. And by the way, with Deirdre Bolton, I remember it because I was talking about China, and I said they're going to go into recession and going to have severe financial issues. And she looked at me and she says, no, they're not. China's in great shape. So everybody has their own opinion. And the fact is that we did see that coming. And another reason why our clients are doing well at this point, we have clients that are very aggressive, that take our recommendations and leverage them and trade the markets on a very heavy basis. But we're conservative. We don't leverage. We don't take unnecessary risks. And fortunately, throughout my career, I've been able to pick trends in the market. For example, I remember back in 1999, 2000, when on CHED, we recommended to everybody to sell out of stocks and buy gold. We were like the laughing stock at that point. I remember other brokers and real estate and stockbrokers and people were saying that we didn't know what we were talking about. And then gold went from $250 to $1,900. So, the fact is that we've been very fortunate to be able to pick trends in the market, and again, we turn that information over to our clients. There's nothing more important to Randy and myself that our Canadian clients have the information they need to do well in the market, and that's what we do. And it's not for money, because we don't charge for the radio show. We don't charge for the newsletter. We're going to be doing many seminars coming up in the very near future, and those are all virtual. You'll be able to watch them on your home computer, your iPad, or your iPhone. And again, we don't charge for our seminars either. So the fact is that we want our clients to do well. The better our clients do, the better my company does. In actual fact, in many occasions, I could have borrowed money and not paid the high returns that we pay to our clients. But it's very important to me that my clients do well. And in a marketplace like we're in right now, where virtually nobody is doing well, again, the old adage of 90% of the money is made by 10% of the people has never been more true. So if you want to be in that 10%, give me a call. Listen to what we have to say. You don't have to take my recommendations, but many have, and we're doing a lot better than most at this particular time.
Speak with Harold, 1-800-432-1022, rarecoloreddiamonds.com. Featured diamond of the week, a .29 carat, round, brilliant cut, fancy, vivid, purplish pink. We'll talk more about diamonds in the second half of the show. John Embry from Sprott Asset Management said, the problem is there's just too much global debt. The system almost collapsed in the financial crisis of 2008, but the antidote was a global QE, which has increased world debt by roughly 50%, or $70 trillion in a mere 7 years. Zero interest rates, unrestrained monetary and money creation, questionable accounting, and constant government interference in markets have kept things afloat to date, but the most dramatic outcome has been historic bubbles in virtually all asset classes. Those in oil and financial commodities have burst, but still to come are bonds, stocks, and real estate. This can be delayed if the authorities are prepared to underwrite global hyperinflation, but this will ensure an ever worse denouncement. And that is something that I definitely agree with John Embry. We're in a situation where we're in a sea of debt, and now is a time to look at hard assets. If you're wondering what to do, speak personally and privately with Harold. The call is free. The conversation is confidential. rarecoloreddiamonds.com is the website. Speak with Harold, 1-800-432-1022, 1-800-432-1022. And when you speak with Harold, ask about our featured diamond, the .29 carat, round, brilliant cut, fancy, vivid, purplish pink. See it at rarecoloreddiamonds.com, the video of it there. We have a picture in our free weekly newsletter as well. Harold will be happy to send out our newsletter to you. We're going to come back and talk about diamonds in detail as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on January 15th, 2016. Our time is 9:09 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. If you ever miss a radio show, you can find us. We have a podcast through iTunes. Type in the World Financial Report on Radio. You can subscribe to the podcast. You can listen to it there at your leisure. We're portable. We go on any of your devices. And as well, Harold has two websites where the radio shows are streaming archived live for you 24/7. rarecoloreddiamonds.com and HES Radio.com. And we have people that listen to our radio show all over the world. And we have, obviously, mainly people listening in Edmonton, Alberta, but we've developed a following all across Canada and around the world. And we say hello to you. This week's featured diamond is a .29 carat, round, brilliant cut, fancy, vivid, purplish pink. You can see it at rarecoloreddiamonds.com, featured diamond of the week. It is an absolute beauty. There was an interesting quote that I found this week. It said, prices for fancy colored diamonds, especially blue diamonds, may get stratospheric as only 0.04% of gem quality mined diamonds mined are blue. In December 2015, Bonhams London sold a fancy grayish blue step-cut diamond, 2.97 carats for, and this is in British pounds now, 1.5 million against its pre-sale estimate of 500,000 British pounds. And of course, we know at the end of the year, we had that Chinese billionaire who purchased a pink diamond, $28.5 million, and the blue diamond for $48.5 million. In total, $77 million, and those diamonds went to his young daughter, Josephine. They were renamed after her, which so they should be. But Harold, you're just looking at the rarest of the rare, and you really see it there when you hear those numbers as only it's 0.04% of gem quality mined diamonds are blue. And that is the rarest of the rare. That's why we love this hard asset market. That's why we love rare colored diamonds. Well,
again, we've seen blue diamonds between 2005 and now. The vivid blue diamonds have increased from 200,000 to over 2 million a carat. But when you look at the return, or what the Blue Moon diamond sold for, which was only 12 carats, and it sold for $48 million, you're looking at $4 million a carat, the highest price ever paid per carat for a diamond. So that's what's happening in the diamond market. Now, obviously, most people cannot afford, a $48 million diamond, and you don't need to. The fact is that, when we bring up what's happening at the auctions around the world, sure, the major stars of the auction are these amazing blues and pinks and greens and oranges and reds and those type of things. But the biggest returns percentage-wise are actually from the lower and medium-priced diamonds. The yellow flawlesses, the 4 or 5 carat diamonds, the diamonds that are in the $100,000, $200,000 range. Those are the diamonds that are going up percentage-wise more than anything. So the fact is you don't have to be a multimillionaire to invest in diamonds. In actual fact, most of our clients that invest in diamonds are not multimillionaires. They're everyday, hardworking people just want to do better than they're doing in other investments. Let's face it. Put your money in the bank, you're not making anything. In fact, you're losing money. Put your money in the stock market, it's a gambling casino. You might as well go to Las Vegas because 90% of the people that are trading stocks are losing. Same situation with commodities. So to be able to own an asset like a diamond that is portable private wealth, that is outside of the banking system, that never declines in value, is an extremely important asset to own, much more important than having at this point a retirement savings plan, because this is your retirement savings plan. The bottom line is you put your money away in a retirement savings plan for 20 years and hope that the market that you put that money into is going to increase in value. And so far that hasn't happened. In the last decade, in the last 10 years, Canadians that have put their money into retirement savings plans have not made a dime. In actual fact, with the market the way it is right now, they're losing money. The only benefit of investing in a retirement savings plan is you get to defer your taxes. You get to invest money into what you hope is going to be a profitable investment, and that investment has got to be approved by the Canadian government in order for you to invest in it with your retirement savings plan, which limits a lot of investments. So now people are looking at their retirement savings plan and saying, this isn't working out the way that it's supposed to. What I'm supposed to do is to be able to invest money in a lucrative investment and defer paying my taxes until I sell out of that investment. And that's not happening at all because you're losing on your retirement savings plan. And then if you pull it, you still got to pay your taxes on it, which defeats the purpose of investing in a retirement savings plan. Many of my clients are going a different route. If you want to know what that route is, contact me, and I'll let you know how you can make money using your retirement savings plan, because if you continue the way you're going at this point, you're going to totally defeat the purpose of putting that money away. So the fact is that there are investments out there in the diamond market that are doing tremendously well. Randy just brought up blues, but the pink diamond market is on fire also. In fact, pinks are mirroring what blue diamonds are doing. And the reason that it's doing that is that the pink diamonds will be extinct very soon, meaning that the one mine that produces 95% of the pinks, the Argyle mine, is getting ready to close. The featured diamond this week is an Argyle pink vivid diamond, the best that you could possibly buy. That's not a diamond that you're going to pay millions of dollars for. You're not going to come close to paying that kind of money for it. But the fact is that that diamond in 10 years will be a seven-figure diamond, because for the last 3 weeks, we brought to you only vivid pink diamonds. And they are the most difficult diamonds in the world to get at this point, because they're the very best color that you can buy. And they're going up by 25, sometimes 50% a year, and the mine is going to close in less than 5 years, closer to 4 years. That means that if you own one of these amazing vivid pink Argyle diamonds, I believe over the next 10 years, you're going to see the same returns as we're seeing in blue diamonds, which is, in some cases, 1,000%. So the fact is that if you're sitting in stocks, mutual funds, or your retirement saving plan is sitting in primarily stocks and mutual funds, you need to make a change, and I can help you with that. Because you put that money into a lucrative investment and you're going to accomplish your goal. Let's face it, we all work very hard. As Canadians, we're extremely hard workers and we're frugal. We're good with our money. But the fact is, certain things are out of our control, obviously what the marketplace does. The fact is that rare color diamonds, pink diamonds, blue diamonds, green diamonds, orange diamonds are doing way better than any other investment out there, and there's no risk to them in the sense that they're in such short supply. It's really economics 101. When the demand for a commodity is very high and the supplies are very low, the prices always go up in value. And that's what's happening in the diamond market right now. The fact is you can get involved in Argyle pink diamonds for under $50,000. 10 years from now, that same diamond could be worth $300,000 to $500,000. You tell me any investment that gives you that type of return with the safety that you have in the diamond market, and I'll look at it. But I don't see anything that compares to the rare colored diamond market at this point. And then we have our other investments, because we're also involved in mining, and those are investments that our clients are doing tremendously well in also. So again, we wanted to give you the opportunity to get out of the doldrums, to get out of these ridiculously risky stock and paper investments and get into something that's going to make you an awful lot of money and set you straight as far as how to make money again in these markets, because I know I speak to a lot of people every day and they're very, very nervous up in Canada, and that's and it's well warranted because of what's happening in oil and in the Canadian dollar and the overall economy. So again, the diamond market is on fire right now, and we have diamonds starting at 20,000, and we have diamonds going up as high as 40 to 50 million. The majority of our clients will buy diamonds under 100,000, and those are the type of diamonds that we put away for the long term. In fact, I've mentioned it many, many times on the show. For my 4 grandchildren, they don't own any stocks, no bonds, no cash put away for them. The only thing that my grandchildren have put away for their future are rare colored diamonds, and I'm very comfortable with that scenario.
1-800-432-1022. Call that number, speak personally and privately with Harold. They'll be happy to explain to you where you can profit and protect the money that you have invested today. RareColoredDiamonds.com is the website. Our featured diamond of the week is a 0.29 carat, round, brilliant cut, fancy, vivid, purplish pink. See it at RareColoredDiamonds.com, featured diamond of the week. And it's interesting to note, and we did talk about it here, that we had the big Hong Kong billionaire, Lau, spending $77 million at the end of 2015. There's an interesting story. We have it in our free weekly newsletter. Get Harold to send it to you, and he'll be happy to send it out to you via email free of charge. It says that pink and blue and now even yellow diamonds are among the hottest jewelry items in 2015, and that's not going to change in 2016. Fancy colored diamonds are probably more important today than ever before, according to Graham Thompson. He's the director of jewelry for Asia at Bonhams. He said at a recent Hong Kong press event detailing the results of the Knight Frank Luxury Index. The term fancy speaks to the depth of color in a stone, with a fancy vivid having the richest hue. The Luxury Index, which tracks colored diamonds as well as jewelry among 10 asset classes, includes cars and fine wine, and prices of colored diamonds have done very, very well. Most of the growth is from pink diamonds, up a whopping 315% in 10 years, and blue diamonds surging 154% in that time. The Fancy Color Research Foundation reports larger white diamonds have risen in value too, but much more slowly at a growth rate of around 5% a year for the last 6 years, and that according to Knight Frank. Why are colored diamonds popular? Well, auctions with headline-grabbing prices are one reason. A bigger one is very, very little supply in the fancy colored diamond market, according to Thompson, and he says people want rarefied things. All signs point for the fancy color trend to continue into 2016 and beyond. The big reason is this lack of supply. To start, there are simply fewer colored diamonds in the world, only a fraction of a percent of all diamonds, according to Tracy Greenstein, Director of Research at the Fancy Colored Research Foundation. Historically, supply has constantly lagged demand in all colors. The rarest sparklers of all, pink. About 1 in 10,000 carats of diamonds are fancy colored diamonds of gem quality, and of these only 0.1% are pink. And nearly all the supply of pink diamonds in the world comes from the Argyle mine in Western Australia, 90 to 95% of the world's pinks, which owner Rio Tinto is expected to close within 4 years. This will have a huge, huge impact on pink diamond prices. And that's why we say to people today, Harold, speak with you about our featured diamond, the 0.29 carat round, brilliant cut, fancy, vivid, purplish pink. Purplish pink diamonds have done exceptionally well at auction, and we can send out auction results from Sotheby's and Christie's at the end of 2015 to prove our point. But this is a diamond that would be a great starter diamond for those that are interested in starting a diamond portfolio collection today. This is, Harold, just a real beauty.
It certainly is. It's one of my favorites. First of all, again, the color is the most important thing. The more saturated the color, the more expensive the diamonds. So as far as pink diamonds go, the important colors are at times the fancy light pinks, but then the fancy pink has got more saturation. Then the fancy intense pink has got more saturation than the fancy pink. Then the odd time a fancy deep pink diamond will come out. And the interesting thing about that is that, seeing that we're cutters, there's been the odd time that we've been able to take a fancy deep pink diamond and actually recut it and get a red diamond, which is the rarest diamond in the world. But then vivid pinks are the strongest saturation of all, and consequently the most expensive. Same with the vivid blues. The vivid blues went from $200,000 to $2 million a carat, and now, the Blue Moon, which was a 12-carat vivid blue, sold for $4 million a carat. There's only one reason that people are spending that kind of money, is because it's a great investment. There's no way in the world that somebody's going to pay $48 million for a diamond if it's just a piece of jewelry. It's something that continuously goes up in value. You just got to give it time to do so. Those that buy diamonds and want to sell them in a shorter period of time are defeating the purpose of investing in diamonds. It's not a short-term situation. With us, we built our own auction business to resell our clients' diamonds. We haven't had an auction this year yet, because what we're doing is that we have discovered that back when we started doing auctions, most people attended the auctions on their home computer, but that's changed tremendously. In fact, now we find that 70% of people that would attend auctions do it on their iPhone. So we've had to change our technology and get involved with new technology that now is going to allow all of our clients to be able to attend our auctions and seminars virtually on their iPhone, their iPad, or on their computer. So it's a really interesting procedure, but we had to change the technology, and that's what we're doing at this particular point. So we will be having auctions coming up within the foreseeable near future. But with a cashless society coming, with all these problems throughout the Middle East and throughout Europe and now here in North America, with all the risk in the marketplace, it's never been more important to put away a diamond for the longer term. It's an investment that will never, ever decline in value because, as Randy said earlier, there's hardly anything around. The fact is, to get a vivid pink Argyle diamond today is nearly impossible. Now, 3 weeks ago, I did acquire 18 new vivid pink Argyle diamonds. Some of them are beyond anything you could possibly imagine. But again, they're available for our Canadian clients, and we try to price them properly, so you're going to make a lot of money on these diamonds. The other thing about investing in diamonds, look at your stock portfolio, your bond portfolio, your commodities and things like that. They're declining in value. That doesn't happen with diamonds. So the fact is that when you look at an investment, the first and most important thing is the risk. And with diamonds, number one, they hold their value all the time. So we're not worried about losing our principal like you are on every other investment that you make. But then on top of that, we also look to make money on the asset. And that's diamonds are also affording us that opportunity. So I think that over the next 5 to 10 years, we're going to see massive increases in the price of diamonds. We've been mining green and orange diamonds out of Central and South America recently, and they're beyond rare. These greens and oranges are going to be the next pinks and blues. So we want our clients to start to get involved in these on a ground floor basis, where you're going to be able to buy them at reasonable prices and then hold on to them and make a killing on them going forward. So again, we've got a firm control and a firm handle on what's happening in the alternative asset market. Alternative assets like diamonds, classic cars, art, those type of things are making lots of money at this point, and we're going to really start to hold our auctions on not only diamonds, but these classifications of assets, because again, it's extremely important that we get into the right assets. The more the risk is happening throughout the world, the more we want to be conservative.
Well, what we have in the newsletter this week, there was a dime that was sold for $2 million. Obviously, it wasn't just any old dime, but you can see the story in our free weekly newsletter. Speak with Harold personally and privately. The telephone number, 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. Get your name on the list for our free weekly newsletter, the companion to our radio show. You can be on the same page that Harold and I are on, reading all the same material. Our featured diamond of the week, a 0.29 carat round, brilliant cut, fancy, vivid, purplish pink. See it at rarecoloreddiamonds.com, featured diamond of the week. One of the things that I'm becoming very concerned about is another financial crisis. And we heard Kyle Bass, we heard him talk about off the top of the show that he's worried about the Chinese banking system. They have a massive, massive amount of money. And even if 10% of their loans go bad, you're looking at close to trillions and trillions of dollars. And that is the last thing that we need in the world right now, is a meltdown in the markets of Japan or even China, more particularly China, with their banking system. And that's why we recommend hard assets like diamonds, gold, and silver. There's a movie out right now. It's called The Big Short. And John Embry had a chance to see it. I have not seen it yet. He said, I had the pleasure of seeing the movie The Big Short of the weekend. Very seldom does a great book translate well into the big screen, but in this case, it does so in spades. It revealed the cesspool that the American financial scene has become, and it did it in a way that even a financial novice could appreciate. It also got me thinking about how little things have changed. Wall Street continues its abhorrent ways, while the vast majority of the public sees their living standards slowly implode. 3 segments of debt have grown rapidly in the United States over the last 7 years: student loans, junk debt to finance the massive boom in the fracking business, and subprime car loans. Each category is now in excess of $1 trillion and are all in the form of some difficulty. So when the next debt crisis hits, and I expect it to be soon, central banks will be found to be out of ammunition with the exception of unrestrained money creation. But that isn't a real solution. It will just bring things rapidly to a worse crisis. And Harold, I have to agree with him. I'm becoming very, very concerned about what we're reading on a weekly basis and putting into our free weekly newsletter. When you have a scenario, as Kyle Bass was saying, $35 trillion in the banking system in China, and if they have 10% go bad, the loans, $3.5 trillion, we could very easily have another financial crisis. And the thing that's interesting to note, Bill Gross, who used to be with PIMCO, now Janus, one of the bond fund kings in the world, he saw The Big Short, and he came out, Harold, and said that nothing has changed. In fact, maybe in some ways, things have gotten worse, if you can believe it. We have about 4 minutes left.
Well, there's no doubt, because the fact is that the problems from 2008 and before have not been addressed. All we've done is, as I always say, put a Band-Aid on open heart surgery. It has not worked. Just look at the price of the bank stocks, and you'll understand exactly what I'm saying. They haven't recovered that much. So we are in big trouble. You just have to realize where is the safer haven, because the whole world is involved in debt right now, and we need to be smart about what we're doing. So the fact is that there's only one place to invest at this particular point. It's in the United States, and it's in the U.S. dollar, because the U.S. dollar is going to be the strongest currency, and we got a lot of room there to make an awful lot of money. So, again, I'll explain it all to those that are interested. Those that aren't, I appreciate you continuing to listen to the show, but the fact is that there's an opportunity to protect what you have and to still make a lot of money. So give us a call, and we're here to help you every step of the way. But there's no doubt, with all the money that was printed, all the debt that is still there, all the debt that the banks are still holding, and all the bad loans and everything in real estate and all that are still there. And eventually, it's going to hit the fan. It's just at this point here, the United States is still the best economy in the world and can still print more money than anybody. So as far as I see, we're sticking to our recommendations. We're comfortable with where we're sitting. We think that we're dead right about everything that we're doing. And again, all we want is for our Canadian clients to get through these difficult times and be whole as far as their cash goes, and we can help you with that.
This week's featured diamond from rarecoloreddiamonds.com, a .29 carat round, brilliant cut, fancy, vivid, purplish pink. See it at rarecoloreddiamonds.com, featured diamond of the week. Our top story of the week. And Harold has been talking about this for quite some time. Harold has been saying we will have a 60-cent Canadian dollar. And now we had the story come out this week, Bloomberg reporting that David Doyle from Macquarie Group here in Canada, Bloomberg's top-ranked forecaster for the Canadian dollar last year, said Tuesday Doyle's latest call came after the currency fulfilled his previous prediction from the last February to fall below 70 cents. He believes that we could hit 59 U.S. cents by the end of 2016. Harold, with about 30 seconds left, if that is the case, here we are today at 69 cents roughly. There's a lot more to go. People need to have a sense of urgency when they talk to you.
You better believe it. Now, understand that you'll feel that 60-cent Canadian dollar when you travel. You go to Europe, you go to the United States, it's going to cost you right now $1,400 or more to get $1,000 U.S. That's what I'm talking about. So let me help you. I've been doing this for 35 years. I've been very successful in the marketplace. And again, we love our clients and listeners in Canada. All we want is to come out of this doing well. So we appreciate you listening to our show and getting our free newsletter. Again, everything that Randy and I do is to help our Canadian clients.
Thank you very much, Harold Siegel, for your knowledge.
My pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Speak with Harold, rarecoloreddiamonds.com, a 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.